How are you guys doing? Today is March 8th. I had a check 2022. It was a wild roller coaster on the stock market today. Let's talk about some picks for tomorrow. Welcome back. Thank you so much for being here. In this video, I'm going to show you within under 20 minutes some fantastic plays you can play today, Wednesday, Thursday, and even into next week. These are plays not many folks are talking about because a lot of folks follow hype. I follow value. I think these plays have some great value and some great momentum you can buy into this week. What's also great about this channel is that I'm going to show you the technical analysis behind why I pick, and you can apply that to any time frame, any volume, any strategy. The TA that I show here can be applied anywhere. We're going to talk about supports, resistances, trend lines, patterns, EMA lines, volume profile, RSI, and the stochastic indicator. These 9 things, that Coca-Cola be hitting. These 9 things make up my trading plan. It comes to entries, exits, all these kinds of great things. If you watch this show from the start to the finish, which I always suggest, you will learn something brand new you probably never knew before. I can guarantee that. And you'll get 1% better at trading. If you can give 20 minutes to become 1% better at something, that's a great investment. I would suggest sticking around. With that being said, if you want extra content, check out my YouTube channel. Got the free class here for you, 25 free classes, all there. Go check that out. Secondly, my Patreon only charges the first of the month. Consider it a free trial on your boy, aka John Stonkton.
Pulls up, three-pointer, bang!
Aka Chef Boyar Swing.
Hey, Mambo, Mambo Italia.
Aka Bruce Wingstein. Imagine these great edits, but premium. Go check out the Discord in the description box down below. It's free until the first of the month. I'd suggest you go check it out. 5 morning newsletters, 5 night newsletters, early picks, day trading chat, swing trading chat, options chat, a whole bunch of great stuff. Go check it out now. I'd appreciate it. If not, it's cool too. I don't really care. With that being said, 8 great picks today. I want to jump right into these. Before we do, check on the cat cam. Your boy is posted up. Look at this cat. Can you name another YouTube channel that does stocks that has a cat in it? And it's not like a picture. This boy's live. It's a cat, kitty cat, cat chat. Ba 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 ba. How I'm not getting bitten is beyond me. So this is what we do. This is my cat. That was wildly embarrassing. What a great song, I'm sure. My students will find this and make fun of me. And I'll get bullied by high schoolers. Good stuff. I am the only stock trader who actually has a degree in education. Here I am teaching. What a day. With that being said, 8 great picks today. Some longs, some shorts, some already doing what I wanted to do, others not really, but they all look really good. With that being said, let's check it out. I'm glad I wrote a script and then we're completely off of it. What a day. So first is ACGL. What a great uptrend here. What we can see, I want to go through all the points technically that I talked about on the screen before. Supports, resistances, trend lines, patterns, EMA lines, all those kinds of things. Let's start with support. What we can see with support is that old resistances become new supports, right? 43.60 is a great resistance area that became a support once, twice, 3, 4 times. Of course, it didn't tap it, right? But it's becoming a good area nonetheless. We can see the one time it did tap it, it wicked back. So this 44 to 43.50 range is a really good support. When it comes to our trend lines, we have 3. We have a great supporting one. 1, 2, 3, 4, 5 solid hits. It does have 1 break, but I mean, even Britney Spears has breakdowns. It is what it is. Sick early 2000s joke. The humor is great. What's great about this, and I mention all the time, is any one of you, any one of me can draw a trend line from A to B, but to have A, B, C, D, and E shows much more consistency. That rhymed. I'm also now a rapper. What a day. So we can see 5 hits, and again, the resistance trend's the exact same trajectory. Also 5 hits. I even drew a regression line, which is kind of like the median of this. Also has great bounces here. We know that this trend line is pure, and also right here. When it comes to our pattern, it's a really nice channel up here. Plenty of higher lows, higher highs. It looks really great. A great bullish setup. And lastly is our volume profile. You can see that if you want to watch my lesson on that, please check it out. But the POC is our strongest support. That's the pro. The con is that it's gravitational, and it wants to pull us down lower, and it wants us to come down probably about a good 10% here to touch it again. But I mean, it's very, very strong support, so it's more of a negative here that's pulling us down, right? But there'll be some plays where this is going to be like up here, like doing these. That's a positive for us. But again, it's so far down. It wants to pull us down. It's okay. Lastly, with the volume profile, these are where 70% of volume happens. So anywhere above that is going to get volatile. Anywhere below that is going to get volatile. That's kind of why at the POC, you see how it's going sideways like so consistently and tightly. But up here, it's wild swings with way more gaps than usual. So up here, you should expect some form of volatility. When it comes to our risk versus reward, my main focus of trades, I'd weight a percent, risk 2 or 3% at most, right? You lose this area, you just get out. A good move is 2 to 1. A solid move is 4 to 1. In this kind of market, I'll take a 4 to 1 setup any day of the week. With that being said, let's check our indicators. What's so great about my channel, besides me and this cat, is that I actually don't use indicators to scan with or chart with. Indicators show 4 things. We call it the MTVV system. Momentum, trend, volume, volatility. I didn't make that up, but it's easy to remember like the TV channel. EMA lines, volume profile, RSI, stochastic, and the vortex indicator show those 4 things. We don't rely or use it as a crutch on this channel. We use those to help us find entries, exits, plan our trade, and goal set. And so as we go through these plays, remember that the indicators are just going to be our icing on the cake. Ooh, vanilla. But our cake is the technical analysis. Nom, nom, nom. If a stock is oversold but no support, that don't mean jack shit. I'm sorry. It has to have technical support. So don't forget that as we go through these. These help us enter and exit and plan and goal set, but we're not going to rely on these heavily. With that being said, let's check them out together. So first things first, I'm the realist. No. The blue line is the 10, the 50 is the purple, and the 200 is the red. We have 2 ways looking at this. I don't think we have a terrible death cross happening. The 50 under the 200 would be a concern for, multiple reasons. But this is fine, right? I think that there's plenty of 200 breakovers that do really well. If you want to wait for the price to get back over the 200, you can here. I personally wouldn't. The 10 also works a bit lower. Let's just say hypothetically that we have some days where candles kind of do this. It muddles around and it takes its time. There's a good chance that the 10 will kind of come down and do one of these. If that's the case, a 10 crossover works fine. But for me, I want to buy into value. I really specify this because, again, risk versus reward is going to be our foundation of everything we do in the stock market. There's 2 ways for a beginner like you to enter a stock. You have value, where you go to like Walmart and you go, that's a good price. Oh my goodness. And you buy it. The second is going to be momentum. That's when the price cuts over an EMA line or a vortex cross or a stochastic cross. Something goes from below to above and crosses over. We call it momentum here. So I think this is a great value purchase. Why is that? First of all, the TA shows we're at value. Secondly, we're below all EMA lines, again showing value. Third, RSI is at 32. That's low. Fourth is stochastic is low. You can wait for a momentum play like when the blue crosses the red, like right there. Boom, blue crosses red. You get a nice little, 3% little move there. Waiting for a move like this is totally fine. It's getting there. It's getting close. So tomorrow that crosses over, that could also be a go signal. But either way, stochastic is still very low. And then vortex, bulls low, show value. Bears high, show bull or bears are getting exhausted, and selling should stop sooner than later. So ACGL here is a really good bullish setup. Higher lows, higher highs. So it comes to a value entry for play like this. This is the time to strike when the iron is hot. I think it could drop 1%, maybe 2% more tomorrow. So rushing in here, not what I want to do. I think 3 o'clock, 3:30 tomorrow. If it muddles around here and kind of dips more, I'll buy it for a swing, hold overnight, then treat it as a day trade. But overall, ACGL, I do love what I see. I would definitely watch list it. Ow. Next is CP. Short this bad boy, in my opinion. It's dying off. It's already doing what I wanted it to do. It's coming down nicely. When it comes to our support, we're looking at 74.40. And again, it's not been a great support. That's a great thing. It's only held price once, then it collapsed. It held price and then collapsed. It held price and then collapsed. So this area has not been a great support. It's only really been a resistance, much more than a support. Your first real main support will be the POC. We're at $71. When it comes to our resistance, very clear here. No price action over this. When it comes to our trend lines, I don't see any supporting ones. I'm sure you could argue that this is one down here, and I would very much argue it. But listen, this is not, I don't care down here. If we see $68 that we crash to 68, by golly, this is going to be a great play for us. Otherwise, there's no trend lines helping us at all. It's just a horizontal play. When it comes to our pattern, easy horizontal channel here, and our volume profile looks great. The reason being, again, this is going to be a support. So as we want to dive into this and drop, it will probably hit here and stop, right? That's not great. But what's good is that it's gravitational. If we can see 4, 5, 6% easily coming down here, I'll be happy. Risk versus reward, I'm not truly in love with where it is now. It came down so far. I want to see closer to $78 or at least $77.50. The good news is the reversals take time. See how long this reversal took? 19 days. See how long this reversal took? 19 days. This one here, 14 days. We are in day, what, 3? Yeah, day 4. There's a good chance we spike back up to 78. So if I do see us at 78, it's an easy short. Our second option here will be a cross under a 10 EMA line or 50 EMA line. Let's check together. When it comes to that, sure, the risk here makes a lot more sense. We finally lost the 10 EMA line, which is our first show of weakness this high up on the index. We lose the 10, it comes down. Over here, we lose the 10, it comes down. Over here, loses the 10, it comes down. So this is great because you can use our volume profile line and the 10 EMA line as your stop loss area if you wanted to. You could buy in here or short here, risking 1, maybe 2%, use this candle. 1 or 2% here to see a POC hit would be about 6%. So again, it's 3 to 1, not bad at all. If we lose the 10, easy short. We lose the 50, easy short, continued. Iron the 200, hold that bad boy and let that bad boy die to us. I think it's a great momentum short. The reason being, values at $78, $79. But we can see the RSI already coming down, right? Showing it's coming down. The stochastics already crossed under, and the bulls are coming down, bears are coming up. We don't really have ourselves a great value to short into. I think at $78 you would, but I think at $76.35 you have a much better chance here for a momentum short. As long as you have the 10 above you, and if you break below the 50, that short's going to come real nicely, make some easy money, let this bad boy burn and come on down to us. CP, I would go long at 68. But up here, I want to short it, quick swing, in, out, bing, bang, boom. I'd watch this. I do love what I see. Next is DUK, another great short. Before you see the energy and you go, why would you short energy? This is definitely a utility stock, right? It's under the utilities. It does have a tie to energy. If I pull up utilities real quick, oh, look at that. It's topping out at a resistance. It's on a resistance trend. I said buy it here. I probably bought it here, and I had me a ball. But up here, it's getting overbought. This is a wildly too quick of a move, right? We're expecting some kind of pullback in some way, shape, or form. Our first support in May see is going to be probably close to like 104 here with this thing. But our first major support would be 101.90. But even then, it doesn't hold weight. It only held over here, and it's collapsed every single time back down to 96. If we can see a move to 96, easy 9 or 10%. And up here, you're risking 1, maybe 2%, easy 5 to 1 play here. The resistance is really clear. It's tied to our volume profile line. When it comes to our trend line, there's a falling one, making a broadening wedge here. I mention that because any pattern that has the resistance trend and the supporting trend differently, it's going to form a new pattern soon. And we're going to see usually a broadening wedge is probably going to come down like this and then take off usually. But I think right here, it's going to come down, hug this supporting trend line, and then continue down further. Volume profile wise, again, the POC may be your price target. It's going to hit this most likely and show some life. But again, it's gravitational. It wants to see us come down farther below 101 and tap that bad boy. Just like the Offspring. Another sick music joke. I'm killing it. That's a great looking short. I do love what I see. When it comes to our indicators, if we open red below the 10 EMA line, this bad boy is going to be golden to come on down. Again, every time you lost the 10 EMA line, we lose it here. First sign of weakness. Up here, we lose the 10 EMA line. First sign of real weakness. So I think if we lose that, we're good to go. That's a great sign. I think you could definitely short with momentum here. I think a short based off of value would be like 106, 190, 107, 108. I think it's a good momentum short. The reason is, again, EMA line cross under is momentum inherently. It looks like to be an RSI coming down, inherently momentum. Stochastic coming down. Bulls are showing weakness. Bears are coming up. So I think it's still a great risk versus reward. I don't want to say like it's a 1-to-1. It's still a 4-to-1, 5-to-1 kind of setup with a 10 EMA line being your buy-in. So like you were short here and you want to have that 10 EMA line being your buy limit so you don't get destroyed as it does take off. DUK is a very good play for momentum. You think tomorrow's going to be red? You think the markets are fucked? Ooh, boned, whatever. It's This bad boy's coming down. YouTube monetization's out the fucking window. Who cares at this point? Overall, though, DUK here, easy short. Overall, I do love what I see. Let's take a moment and check on my cat. This boy is absolutely slumped. He is having a coma due to his wet food. This boy is not active today. What a dream. We're all just blessed to have him here. Next is ETR, another great short in a row. It's the same exact thesis for DUK. I don't want to state the simplicity here, but it comes to support, it doesn't hold water besides this POC. This is the only support we have that make this risk versus reward illogical. It'd be like a 2-to-2 or 1-to-1. You know, that's not terrible. It's not great. But besides that, the only support really is going to be 104. And right there, it's an easy 2-to-1. And your best one is $100. So I think the support's not very strong. The resistance is legendarily strong here. It's not breaking at all. Our POC is gravitational, pulling us down. And the pattern's clear. It's just a horizontal channel. It doesn't have any life. It's an XLU stock. It had earnings, overreacted up, and now it's coming back down to earth. If it bounces here, this is the one thing we may see it happening is bouncing here. But as we can see, it's already coming down farther than these support spots. If it comes down to like 109, this bad boy, stick a fork in it, it's done. Same play as DUK, but easy short nonetheless. I love what I see. When it comes to our indicators, if I can click this dumb little thing. There we go. A 10 cross under is happening. That's your first sign of weakness. Even if it takes long to reverse. See how long it takes to usually reverse? It takes like 30 days and some change. Over here it took like, again, 30 days and some change. It sometimes takes us a long period of time to really plummet on us. But this is your first sign of weakness. I love to see that as well. You know, a 50 cross over here would be a golden cross. But I think that if we see that, it could still drop pretty easily. I think, again, this is a great shorting momentum play. The reason I'm saying that, under the 10 inherently is a shorting momentum play. That's definitely momentum. RSI is coming down already, nicely coming down. Stochastic is coming down. Bulls are down and bears are up. So I think ETR here is the same exact play as DUK, but it has a different risk tolerance, a different price, a different leverage. You choose what you want to watch. But I think either way, if this loses the 10 tomorrow, loses this $108 area and comes down hard, it's going to be a very easy short with very little risk to you. In my opinion, ETR here, I'd watch list it. I do love what I see. Next is GNW. I'm back on the bull with this one. All right, I think we had 3 shorts in a row. Let's get back on the bull. When it comes to our support, very clear here at this area. Old resistance became a support. Support, 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 support. It's holding up beautifully, doing exactly what you want to see for a support play. Resistance is very clear as well, all based off this area. And our volume profile line helps us form our pattern, which is an ascending triangle. I am biased towards these because I love what I see. All I see here is that we said bulls said 280s fair and then sold at 420. Good date. And they said, all right, well, actually, I think 290s fair and then sold at 420. And they said, well, 320, then 328, and then 330s fair, sold again at 440, 420. Came back down, back up. You can just see clearly the higher lows with the same resistance area. Bears have no power anywhere below 380. Folks buy in here consistently. Great trend up. It's a great pattern. And again, our POC is double-edged as always. It wants to pull us higher, a good 8 or 9%. It will be your strongest resistance, though, that coexists well with a traditional resistance. So getting your britches all big, like, I'm going to put a price target up here at 440 because fuck it. You're probably not going to see that. You're probably going to see in this market it moved to $4, $4.10, and it comes back down pretty quickly. So I'd definitely be careful of that, getting greedy. I mean, you do have some form of lower highs here, right? But I think overall, great ascending triangle, great support, clear volume profile. Overall, I love what I see. With our indicators, a 10 cross is getting great, right? If you were to see a 10 cross tomorrow, a 1 or 2% move for a confirmation of a trend reversal is fine in my opinion. I have to note though, while you're below the 50 EMA line, your 10 crosses, in the words of me, can be pretty shitty. I mean, you cross the 10, and I mean, you don't get many great moves unless you're over the 50. That's what you want to see. That's the 10 cross you want to see right there. Only really happens over the 50. So I think you wait for a 10 cross, sure. I wouldn't. I'd buy into value. But Evan, how do I know that I have value? Again, the TA shows it. Support's here. Trend is here. POC is above us, want to pull us higher. Below all EMA lines. RSI, it's low. Stochastic, it is low. Bulls are bottoming out, bears are on top. GNW is every single sign of what I would consider a great value purchase at this point. I think you could wait for a 10 EMA crossover if it comes down farther. But again, while you're below that 50 EMA line, the crossovers are pretty null and void and make very little sense to wait for, especially when the risk versus reward here makes a whole lot of sense. For a penny stock that's forming a great ascending triangle, I would watch list it. I do love what I see. Next is Johnson & Johnson. I think they're an easy short. And again, it's already coming true. I mean, I think J&J had just so much hype from COVID that they're like, oh, well, COVID's good. We had the vaccine. And then folks bought in. And ever since COVID really kind of started to slow down, it's gotten a 150 to 170. Now it's range bound. Not doing a single thing that I would consider great, honestly. I think you're going to see this bad boy come back down to 158. Probably go right back up. Right, this is an easy dividend stock, great earnings, whatever it is. But up here, folks bought in. They got a nice 10% move. And now they're going to start selling off again. I mean, your first support's 166. It's okay. It's held once. It's held twice. But you can see multiple times it breaks down constantly. It's a much harder resistance. I think 164 is a better support. Even 162 is stronger. But I think 158 is your only real support. Resistance, it's legendary, year-old, ain't doing nothing. No trend lines either way. And again, volume profile is on our side. It's gravitational. I want to see it come down at least 3 or 4%. But I think the full move here, risk-wise, is 6. I would probably risk 1 or 2% here for a short. Overall, 3 to 1, 2 to 1 kind of odds. I love what I see for a short. And if J&J does break down farther, even better. When it comes to our short, our last one today, it has to be momentum. We're below the 10. Value shorting would have happened at 172 or 173. Below here, it's all momentum. The reason I'm saying that is you have a 10 EMA cross under. That's your first time momentum. RSI coming down, stochastics cross under. Bulls and bears are flirting. If bulls do this and bears do that, that's a wrap, big fella. J&J is coming down for sure. So you want to wait for a vortex cross under. That's great. You want to wait for the stochastic to drop more. That's great. You want a 50 cross under. Also great. But I think anywhere in here below 172, I'm going to ride the momentum down. And once I hit 172 again, I would look to short. When I go long at 158, hell yeah, brother, that's dope. But I think up here it makes very little sense to go long. If you think the markets are weak, you think healthcare is weak, you think this COVID thing's kind of coming to a close, not getting political, but you think that the vaccines have ran their course, we're going to kind of get over this. This may be a good time to start shorting some stuff that may be overbought. J&J, watch this for sure regardless, but I think for a short here, that makes a whole lot of sense. Last cat cam of the day, zoomed in. This bad boy is absolutely slumped. It's like I'm in a freeze frame. If I wasn't doing this in the background, you would think this bad boy is a statue. But this man is just having the time of his life, just slumped out, being the best boy ever. He's just donezo. It's a wrap. Wet food puts that boy to sleep. Next is UMH, our last short of the day. This was a great run-up. I played UMH a bunch of times last year. It was an easy play. It was great. But now we're starting to consolidate sideways. It's a very easy short here. And again, it may not make much sense to short here. I think a 24.50 makes sense. Here, it's more of like a 1-to-1, 2-to-1 kind of setup. Not the end of the world, but I don't think compared to like Johnson or like Duck, this is the best short. I think it's an earnings overreaction. It ran up. It's going to come back down. Simple support, simple resistance, horizontal play. I'm not going to harp on it and spend too much time. Lower highs, same low. I think it's going to come see $23, if not closer to $22.40. If it breaks down below here, it's a wrap. This bad boy is coming down. I'd spend more time talking about it, but I think it's a very easy play like the other ones. Momentum, again, if we lose at 200, it's an absolute wrap. Below the 200, this bad boy shows major weakness. Below the 50, major weakness. If you get another like percent off here, this bad boy is absolutely done for. And it comes to our indicators, besides the EMA cross unders, RSI, it's losing life. Stochastic coming down beautifully. No bullish divergence, no bearish divergence today in any of these really. I think J&J had a small one, but it's coming down. Bulls are showing weakness, coming down. Bears are coming back up. UMH here has no life. I don't think it has anything going for it besides its historically great life on the run up here. But if it loses the 200 and then the 50, it's a wrap, dude. You're gonna get those cross unders. It's gonna come down. It ran up massively, and now the tapering's happening, and folks are scared because of Russia. It's not showing any life here. Earnings overreacted. It's coming back down. UMH, I'd watch this. I do love what I see. Lastly is VMW. This is a really nice looking support play. Unlike our play like ACGL, we have some levels of convergence. You have the trend line, the support here, great pattern. VMW is a very simple play. It's like DUK, but in reverse. If this line at 108.60 holds, you can go long and have some pretty good confidence, right? If you lose 108.50, I would lose all confidence and probably just get out. Your POC wants to pull us higher. That's gravitational. That's a nice 5% away. It wants to pull us higher. That's a great sign. It will be a resistance, but once it pulls higher. Great support. Anywhere down below this volume profile line, it's going to get quick moving. See how quick and weird these movements are and how quick it got back into it? See this wick here? It's going to move quickly. See how quick these moves are? Anywhere down here is going to get volatile. Earnings, it ran down, overreacted, it's coming back down. Your risk versus reward here, easy, 2%, 2.3 to make 5 or 6. For a small move, overall, it's a fine support play. I would have more to say about it if it wasn't such a simple horizontal play. Just to reiterate, you lose 108.50, you just get out, buy in lower, or move on. If it holds that, going long makes a lot of sense. When it comes to our thesis of how to enter value or momentum, it's a value entry. Why? 10, 50, 200 are all too far away. You're not going to wait 5% to then risk, this whole area to then make 1%. You're not going to wait for a crossover. It's all value. Again, the email line show that. The technical analysis shows that. RSI at 30. Stochastic is low. It doesn't have exactly a divergence yet. But if it does reverse here and show some life, that's an obvious bullish divergence. Bulls are low, bears are high. Selling's getting exhausted. VMW here, make sure you do your due diligence. This is a watch list show. I'm not your advisor. Don't trust everything I'm saying. I have tattoos and piercings and a dumbass CAD cam. Don't just trust me. But if VMW has no real earnings concerns or fundamental concerns, and it's just a technical nice setup, it's a fantastic risk versus reward, and I love the support play for the simplicity. VMW, I'd watch this. I do love what I see. Thank you so much for being here. It means the world to me. We'll see you guys tomorrow and Thursday for another watch list, and we'll see you guys then. Thank you so much. It means a lot. We'll see you guys then. Thanks.